Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very beautiful weekend. And in today's markets, guys, well, we started off the week in an entirely red fashion. Most of the market indexes were bright red today, and not many names across the S&P today saw some green whatsoever. A lot of that has to do with two pieces of uncertainty that we're dealing with. Number one, obviously, is the Israel-Iran conflict that is continuously ongoing, and the market's expecting a little bit of a retaliation from Israel in relation to the attack that Iran had on the country last week. And those concerns have kind of been plaguing the markets ever since the early portion of the morning today. Also, in another news segment, we also have sadly, another hurricane that this time is going to be battering the coast of Florida in just a few short days. So, of course, this is having another issue of uncertainty for the markets as well. And I do believe, guys, that uncertainty will be the theme for the month of October. We know that there's going to be election uncertainty. We also know that there's going to be a ton of earnings uncertainty coming out in the middle of the month. And I do expect this uncertainty, guys, to pretty much, as I said, be the theme of the month of October. So we will be a little bit more prudent and cautious in the style of trades that we are willing to take. Now, in today's video, guys, we're going to take a quick recap here of our technical analysis, take a look at our major market rundown in terms of the indexes, see how those are shaping up. Thereafter, take a look at our technical analysis on our big tech names as well, see how those are shaping up too, and whether or not after a one big day's worth of red today, there is some deals to be had in the market. So without further ado, guys, let's go right into today's video. So the SPY down a whopping 0.9%, the QQQ is down a whopping 1.07%, and if you take a look at the indexes reel here, guys, all of the sectors pretty much ending in the red, all except for two sectors in specific, and that is going to be semiconductors and energy. Take a look at the heat map here, guys. It definitely was not pretty whatsoever. Big tech getting absolutely washed here today. The only saving grace for the markets was NVIDIA putting in a 2.25% up day. They, of course, start their their AI conference here over the next 2 days. So bullish news coming out of then. But that is pretty much where it ceases, right? We only had a positive day across energy, obviously due to the reaction to the geopolitical events in the Middle East. Energy remains a fairly bullish trade. But the rest of the market, guys, really dropping off a cliff right here. Financials down in a big way. Healthcare down in a big way. Nothing really good to be had across all your software companies either. And even the bottom half of the market, guys, the ones most in tune to moves in interest rates, have also been down because of the continuation of the move higher in yields. This has been one of the more aggressive move in yields, guys, that we have pretty much seen all year so far. We know that we're used to getting these little 2-3 week rallies in yields, and I do believe that this one right here is going to be coming to an end quite shortly. We know that the long-term trajectory of the yields market is, especially in the 10 and 20 year, going to be one of an overall downtrend, but we are not immune to some short-term fluctuations in yields. Why have yields been skyrocketing ever since Jerome Powell pretty much cut interest rates all the way back here? You would think that it would be having a negative effect on yields, and it's pretty much had the complete opposite factor. Well, just keep in mind, guys, there has been a lot of expectations baked into these yields so far, especially on the longer end of the curve, meaning that a lot of traders and investors, guys, were anticipating as early as the early portion of August, they were expecting somewhat of a hard landing recession. Roughly a month and a half ago, the data that we were getting out of the economy, out of the jobs market, was not the best, right? And now that we've been having good data come out in the past 1 month and a half, well, we are now starting to reverse a lot of that fear-based trade towards a hard landing recession. So one of the primary reasons that yields are going up is that the expectation that the Federal Reserve is going to have to panic and do some emergency rate cuts and just overall accelerate the path of rate cuts. Well, those worries have kind of now been abated, right? Especially after yesterday, or rather Friday session's jobs report that showed the economy and the jobs market was still in relatively healthy conditions. So the yields are going to be one of the largest things to watch here in the next few days, but definitely when we have super aggressive moves to the upside like this, it's very tough for equities to respond in a bullish fashion. So a lot of uncertainty in the markets right now, guys. tons of conflicting data. We've had 2 hurricanes in the past 2 weeks. We've had the geopolitical concerns in the Middle East. We have the ongoing conflict between Russia and Ukraine. We have the election cycle coming up. We have October earnings, which a lot of people are worried about, and we'll get some real data, right? If you didn't believe the data that we got from the jobs market, well, we are going to be getting some very real data coming out of all of these companies in October. Are they going to be laying people off? Are they going to be stalling on hiring? Are corporate profits starting to take a hit because of consumer discretionary spending coming down? We will get to hear that and everything from these companies specifically. So if you do not believe the data that is coming out of the government, well, we're going to have some actual real consumer-facing data coming out of all of these corporations. So the month of October is going to be a fairly wild ride, and the VIX is kind of agreeing with us as well, right? The VIX really coming into an uptick cycle over the past 2 weeks worth of time, now up to 22.65. We are now well within fear category for the markets, but the markets haven't really dropped too much in that process. The SPY still very close to the all-time highs, and the QQQs as well. Although we are off the Thursday highs of 2 weeks ago, we really haven't moved too much with all of this increase in uncertainty, the increase in the VIX, and the spike up in the yields. So the markets still do remain somewhat healthy in the face of all of this uncertainty. So let's jump into the technical analysis portion of the video right away. So moving into the SPY, guys, down about 0.9%. We have not lost the daily higher lows, have not lost the daily uptrend just yet, but we are going to keep a lookout on those two things shortly, right? So the lows that we need to watch out for on the SPY, guys, 565.53. Lose those without taking a new all-time high in consideration, and you end up with a daily downtrend. You end up in the weekly consolidation that we've been looking for the past couple of weeks. We saw the bulls were getting a little bit tired here pushing the all-time highs. Would not be surprised if the early portion of October is met with a little bit of selling pressure right there, and we're just going to be looking to set up for the weekly higher lows for possible further trend continuation as we move through the uncertainty cycle and start getting some of those juicy corporate earnings. But as of today, guys, not looking the best, right? We've erased all of the positivity from last Friday's jobs report, and we just continue this kind of sideways action on the SPY. So we'll keep our eyes peeled, but I do believe, guys, that any short-term dips to the downside in the month of October will be for a decent little buying opportunity. Now, moving into the QQQs. So the QQQs down about 1.07%, but also not breaking any major levels. Still in a decent daily uptrend. We have the daily higher lows, and now it is up to the bulls to play some defense, right? Keep an eye on these lows right here. 477.50. If we were to break below those without making a new 52-week high, well, we will be in the mix for a daily downtrend, and that will result in further weekly consolidation. That too, we have been on the watch for, guys, in the past few weeks. QQQ struggling to push to new highs and may just be due for a little bit of weekly rollover. We're just looking for a weekly higher low. Anything above 447.50, let's call it, is just going to be looking for that weekly higher low for possible further trend continuation. And I do believe, similar to the dip we got in August, in September, I do believe this one as well will be for a decent little buying opportunity in these markets. Now, moving into financials. Financials down about 1.23% as well, giving back all of the gains of the Friday rally, and financials are just consistently trapped in this somewhat tightening range that we've been having since the early portion of the month of September, right? So the daily levels to watch out for, guys, is definitely going to be 44.66 to the downside. If you breach those, unfortunately, you will lose this beautiful daily uptrend that the bulls put underway in the last 2 weeks. You'll be rolling that over, and then the bulls are going to possibly be looking at the bears trying to set up for the lower high into lower low scenario, daily downtrend scenario, and possibly looking to bring this range a little bit lower into further weekly consolidation. As of now, no red flags, still just a tightening range at the top here. So keep an eye down here. 43.42 is going to be the level to watch on financials. If we break that, weekly downtrend is underway, and you would just be in line with some monthly consolidation, guys, and we have some very big levels below us with the 12 EMA down in the 42 level. I think that the only way that the financial index can really come down hard into those levels to set up for the monthly higher lows is going to be with all these bank earnings on the Friday session and coming into the next Tuesday session as well. If none of them are good and all of them are really poorly received by the markets, that is when we could see that big 5% downswing into that maybe 12 EMA right down here. Once again, just looking for a monthly higher low for further trend continuation. So before playing any financials, I'm going to wait for those earnings releases on Friday. Now, moving into healthcare. Healthcare, once again, with a daily decline, extending this daily downtrend just one a little bit further. So not looking the best on healthcare, and we are still not daily oversold, even though we're coming in to this decent area of support, which is 151 down to about 150.5. So daily downtrend continues, guys. When can you see a bottom on this one? You need to watch for the 1 hour trend change. We've been talking about this for a very long time, right? Never getting a 1 hour trend change. You need to see the 1 hour trend change to the bulls with the higher high, higher low, and higher highs. That would be hourly trend underway. And then you would need to watch the size of the bounce on the daily. If the bulls can get either an engulfing move or a very decent bounce, about 60-70% retracement size, you set up yourself in a very nice fashion for the daily uptrend to be reversed. All that being said, guys, still no sign of that just yet. Continuation of the weekly downtrend is in motion, which leads us to believe that since we're in a weekly downtrend, the monthly consolidation is still underway. Monthly uptrend is very nice right now. We'll be targeting, in the event we lose this short-term area of support, target the prior all-time highs, which is a major level on the monthly time frame right here, and it lines up with the 12 EMA. So if we have further weakness in the month of August, 146, 147 is going to be the mark to watch. Possible very decent trade setup here, guys, for the breakout, retest, and run for the healthcare sector a bit later in the month of October and maybe even early November. Now, moving into SMH. SMH up about 0.16%, but it was largely only due to NVIDIA's performance. As you can see on this list right here, there's really only 2 companies or maybe 3 companies that were green in the entire list, right? Micron, AMD, and NVIDIA, but NVIDIA, the only one up by at least 1%. So it was very top-heavy sector today, but SMH kind of not doing the best right now as a whole, right? Daily uptrend is underway. This is true. Daily higher lows are set, but once again, we are getting rejected our area of resistance, 257 down to about 248.70. So we'll keep an eye on how this one moves throughout the week. The last thing you'd want to see if you're a semiconductor bull, guys, is lose this support, 237.21. That would be a new daily downtrend and would just lead to a bit further weekly consolidation. We never really established a weekly uptrend. As you can see, equal highs right here. No breakout, no follow through, and no bullish closes. So any further weakness, guys, will just lead to tightening up this very wide range of accumulation, and we would maybe be heading back down into this support zone below us, 238 down to about 224. I remain firm on the way that I love playing semiconductors the best right now, guys, which is going to be benefiting from the volatility to be riding short put options on your favorite semiconductor names that have been down a little bit over the past couple of weeks. Moving into the Russell right now. Well, the Russell down about 0.78%. Very tough for the Russell to run when we have so much high uncertainty in the markets. So daily downtrend is underway. Lower high is set now, guys. Now it's up to the bulls to play some defense. If you lose 215.17, you will just perpetuate the daily downtrend. And at that point, we will simply go back into our area that we've been monitoring for a while, 211 down to 210, perpetual tightening range in motion right now. So in the event we continue to move through uncertainty, the markets continue being weak in the early portion of October, expect the Russell to continue to fall. As I said, back down here, 210 to 207. I'd be highly surprised, guys, if we get any truly bullish catalysts to send this one to the absolute moon beyond our area of resistance above us, 225 to 230. It's just not the correct market environment for the risk on trade right now, at least not yet in the month of October, maybe in November and December when we get through a lot of this uncertainty right now. But I think that the month of August will be partially muted for the Russell. Now, lastly, moving into the Dow Jones, even the Dow Jones, one of your more defensive indexes today, taking a big hit down about 0.94%. So we are on the watch for the break of this big support level, guys. Once again, equal lows. This is now 1, 2, 3, 4 touches of this level right here. And I'll remind you, if we give it up, that would be daily downtrend underway. And at that point, guys, what will we be looking for? We would just be looking for a very healthy weekly higher low for possible further trend continuation. So as I said, if the early part of the month of October is fairly weak for our markets, we get hit with a lot of uncertainty headlines, geopolitical headlines, and everything in the kitchen sink in between, well, expect a little bit of a retest down here, 41,003 all the way down to roughly 41,000. Would not be surprised if this area acts as very beautiful support for our long-term bulls, looking to tap the 12 EMA and the prior 52-week highs as well. So decent little area of confluence to be working with there. If you're a bull looking for a swing trade on the Dow Jones, I'd be looking for this level coupled with short-term oversold conditions, right? You'd like to see the 1 hour time frame get oversold, coming down into that very, very large level on the weekly time frame. That would line up beautifully for a little bit of a swing trade. Now, moving on further, guys, we've already largely covered the VIX and the yields in the early portion of the video, so I'll skip over those. Just understand that for your longer term yields, guys, TLT on the daily is coming into daily oversold conditions, and this one is not a tech stock. Usually when we come into daily oversold conditions, such as this area right here and this area right here, this whole zone of oversold conditions, usually we do tend to get a pretty decent bounce. This was in the price action for the month of April. And even as you can see it all the way back here, right? Well, October 2023 was the big scare in the markets. It actually went even further oversold, but keep in mind, we were still in a holding rate steady environment. We were not in a rate decreasing environment. So this one was kind of an anomaly back in the early portion of October of last year. Usually when TLT hits daily oversold condition in the context of a rate declining cycle, you tend to be able to find somewhat of a cyclical bottom. I'm not saying that the market's going to do this, but we may just be in the process of figuring out a local bottom and then reverting to the upside. I still believe this one is going to be in a long-term monthly uptrend over time, but as I said, it's going to take some time. So if you're in this trade, guys, you're probably not expecting a very sharp and quick move to the upside. If you're expecting that, you're expecting a hard landing recession, and you're expecting the market to start pricing in a lot more rate cuts than it's currently anticipating right now. Now, let's move further down to our list, guys. Let's take a look at big tech, because I do believe that some of the best opportunities in the market right now are going to be in some of the big tech names, right? We know that a lot of the trades today, guys, if you take a look at the list here, the more volatile list that I have right here, the only things that were doing well today, for the most part, except for SMCI, were a lot of China names. China names still very strong. NVIDIA up there as well, but it's mostly China names, NVIDIA, TSM, and that's pretty much it, right? Other than that, the rest of the market was fairly muted. Oil names as well. So China oil names were doing fairly well here today. But what was down to the downside, we had a ton, guys, a ton of big tech names. And I do believe there's starting to be some juicy opportunities in those very same tech names. So Apple down about 2.25%, and it finally happened. The daily downtrend, we were watching for the break of this 224 level. We finally got it. Now, daily downtrend is underway on Apple. Keep an eye out on the support level below us, 219 down about 214. Daily downtrend means that we are officially in weekly consolidation mode. So that's why I say keep an eye on the 214. As of now, this is just a very wide range of accumulation for Apple. They tried to go for the weekly trend breakout, did not get it, and now it seems as though we want to retest that location. Pay special attention though to this one, 214. If we lose it, since we did not make new highs, if we lose it, that would be weekly downtrend and would be a start for some monthly consolidation on Apple. I've been waiting for this one for a while, guys. It is a very nice monthly uptrend, but I think it's probably run its course. If we were to move back down into the lower 200s for that monthly back test, possibly of the previous all-time highs, that is where I'm going to be looking to play Apple, guys. 205 down about 200 is the sweet spot location for me. So keep your eyes peeled. As of right now, not enough of a dip buying opportunity on Apple for me just yet. Now, moving into AMD, give me another brief second. Looking into AMD, decent little day on AMD, guys, especially in consideration with the rest of this heat map, right? It could have been a lot worse for AMD, not looking too bad. AMD is still looking extremely strong, guys. Beautiful daily uptrend. The daily higher lows are already set, 159.19. So in the event we continue getting market erosion over the course of the week, just look for the week daily higher lows, right? At this point, anything above 158, looking for the daily higher lows for a possible further continuation of the daily uptrend. We are also still very nicely above this area of support, 162 down to about 154. We know, I've been talking about it a lot. It's been a highly contested area this entire year so far, and I expect this backtest to be no different. We are also above all the moving averages, so the trend looks good, and the next area of resistance above us, guys, is about 180 to about 183. I will be interested in playing any AMD pullbacks, guys. In the event we do get a pullback, I'll be looking to write some short puts right in this area of support down here. So keep your eyes peeled. I still believe that short puts or any credit strategy is probably the preferred strategy right now for any semiconductor plays. Now, moving into Amazon. Amazon down 3% because one analyst at Wells Fargo gave a downgrade today. Now, I don't believe that's the true reason that Amazon is down 3%. As you can see, no tech names, and the entire market was not spared from some steep declines here today. But just want to reiterate, guys, the fact that most of everybody is still extremely bullish on Amazon, right? So, one analyst downgraded their price target from about 220 to 183. That was Wells Fargo. But look at the other roughly 64 analysts, right? They are all either strong buyers or buyers. Only a few person with the Wells Fargo guy at a bit of a hold. Beautiful EPS expansion over the next couple of years and beautiful revenue expansion as well. I would not be too worried for this company. If anything, I do still think we are in a good dip buying opportunity for this company as a whole. That being said, we are in the midst of a possible new daily downtrend on Amazon coming into the last line of defense right here, the 180 down to about 178. It's not really one line, it's more of like a zone, right? As you can see, few wicks down here, few wicks up here as well. So this whole 180 to 178, crucial level on the daily levels to really stop the bleeding on this daily downtrend. So we'll take this one day at a time, but we're coming into a juicy area, guys, where I love riding short puts on Amazon, guys. 175 and below is a very sweet location for those short puts, in my humble opinion. In terms of your short-term time frames, we are also coming into a little bit of almost hourly oversold, coming into very weak conditions as well on the 4-hour. So if this daily downtrend persists into that 175 where we have more support, we have the 200-day EMA and the start of this beautiful green box of support, which is, you guessed it, the prior all-time highs here, that is a much more stable level. And I do believe that the buying opportunities down here will be very juicy. As a matter of fact, that is where I'm looking for leap call options myself. On the weekly, what are we looking into shaping up for? Well, beautiful weekly uptrend, looking for the weekly higher lows and a lot of space still, anything above 169. Going to be looking for the weekly higher low for possible further trend continuation. So I really like to start playing Amazon around these levels, guys. 180 down to about 170 is my target location for either short puts or loading up for some call options with a lot of time on them. Give the market some time to move through this uncertainty. All you need to know is that you're buying a very solid quality company at a very decent level. At that point, Amazon would be back down roughly 13 to about 16% off the all-time highs. Great location to buy Amazon, in my humble opinion. Moving into Google right now, Google also down 2.4%. This is going to be a common theme across all the names, guys. Nothing being spared today at all. So Google had this very nice daily uptrend underway. Daily higher low was set with the lows of last Thursday. And they tried for the push into this resistance zone above us, 172 to 179. And unfortunately came undone, no new highs, and now we have the lower low. So daily downtrend underway for Google. Short-term support levels down here, of course, are at the 162 level. We'll see how the bulls react to those in the near-term future. But one thing's for sure, if the daily downtrend persists and we move lower, we'll just be looking for a little bit of weekly consolidation. We've been anticipating this on Google for the last week's worth of time, which is why I threw on some covered calls on my leap position in the first place. And take a look at this weekly downtrend, beautiful engulfing move. We engulfed almost 100% or exactly 100% of the leg. So now the bulls have a ton of space on the weekly, guys. Anything above 148, looking for the weekly higher low for possible weekly trend conversion, maybe into the later portion of October into November as well. So I would not be surprised the first 2 weeks of October are a little bit red. One thing's for sure though, guys, if we come back under 160, talking about 158 all the way down to our support zone, 158 to roughly 148. This 10-point range is an extremely attractive area to be buying Google at, in my humble opinion. It is literally the confluence of the prior all-time highs, the 12 EMA on the monthly as well. So I love dip buying Google in this location right there, either for short put trades to benefit from the volatility, to pick up some shares, or possibly even for some leap call options for late 2025. Would be very interested in those as well. Moving into Meta right now. So Meta, again, another big tech name, down almost 2%, but Meta has a lot of space, right? We know they've went on this astronomical rally to the upside, barely grazing the 603 level. So congratulations to the Meta Bulls. They hit the 600 psychological target that we were anticipating. And now we are looking for the size of the pullback, right? We know they have a lot of space, anything above 554, looking for a daily higher low for possible further trend continuation, but take back too much. And if the markets do continue to roll over, the bears might have it in the bag for the lower high into lower low. And at that point, you guys know the drill, right? What are we looking for on Meta? Look at all this space. Anything at this point above 495, looking for a weekly higher low for possible further trend continuation. So target these levels right here, 540 to 530 for a little bit of a back test would be a super juicy breakout, retest, and run trade. I think that all of these tech names, guys, may, even if the markets do consolidate, guys, most of these big tech names will be consolidating until their respective weeks of earnings. And for the most part, that is going to be the week of October 21st. Let me move myself to the side right here. As you can see, most of them are all there, right? We have Alphabet, we have Microsoft, we have Tesla, we have MasterCard, so many big names. The week before that, we have Netflix, of course. The week after that, we have Apple, Visa, AMD. So it's all going to be leading up to these last 2 weeks in the month of October. But I think earnings for big tech names are going to be quite good. So if we see some earnings or some consolidation prior to earnings, I think it's going to be a buying opportunity leading into those earnings. And obviously, if one of these companies has a bad earnings turnout and goes down 5, 6, 7%, you guys know I will be buying. Now moving into Microsoft right now. So Microsoft also suffering another day of downside. Look at this decline on Microsoft. Microsoft really, since the highs of July, we really haven't had that many green days at all, right? You look at this chart of most recent history, it's just a bunch of red, right? Usually Microsoft has a lot more green days than red days, but recently it's been a tough little journey for Microsoft. That being said, no fundamentals of the business have changed, which is why I still do maintain these dips on Microsoft, especially now that we're under my 410 into the $200 EMA rather. If we fall further, 400 down to about 390, I love this zone on Microsoft. It's been big support for the company all year. And as I said, none of these price declines on Microsoft shares have been because there's anything fundamentally wrong with the company. It's just a big, wide rotation, guys. There's so many narratives at play right now in the markets, so much uncertainty, rate cuts, election cycle, earnings season, big tech versus value rotation, right? Still so many things at play here. The best thing we can do as traders and investors is identify extremely high quality companies with very solid business models and bid the very large areas of support, especially when we're coming in, guys, to Microsoft, right? 4 hour coming into oversold conditions right now, and the shorter term timeframes, the hourly already starting to be oversold. So this is where I really like to start building some swing trade positions on Microsoft. Every time we've done them so far this year, you'll remember on the channel, I bid Microsoft all the time in the lower 400s, and it's always worked out fairly well. The valuation down there is a lot more manageable, and the bulls seem to be playing some long-term defense at these levels. So I still like it, guys. So daily downtrend still underway for Microsoft. That is clear as day. Weekly as well. A big weekly consolidation, guys. Would not like to give back the 400 level. That would just erase the weekly uptrend, and we once again go into kind of this sideways consolidation action that Microsoft's been trapped in since the early portion of January. So Microsoft right now is one of the companies that is underperforming the S&P on a year-to-date basis. That does not happen very often, which is why I still do maintain lower 400s is going to be a buying opportunity for me. Moving into Netflix, Netflix down 2.47%, had started to kind of tap into this overall area of support, which is 700 down to about 675, right? As of right now, no major red flags on Netflix, still holding up the daily uptrend as best as they can. Just be mindful of the loss of 697. Lose 697, daily downtrend is underway, and then we will definitely be in a little bit of weekly consolidation. Keep in mind, the weekly level's 662, right? So we'd still just be looking for a weekly higher low. There's a ton of support below us, so I wouldn't rule out the bulls' ability to play defense just yet. That being said, it was a relatively big red day for Netflix. We'll look at this one day at a time, guys, but the bulls are in control of the larger term timeframes. Earnings are coming up very shortly, guys. Next Thursday, as a matter of fact. So not that many days of price action left for Netflix before those earnings. And you guys know me, right? If Netflix falls off after earnings and revisits some of the lower areas down here, 660, 650, 640, I will be a big time buyer because at that point, we'll just be looking probably for a monthly higher low for further trend continuation. Nothing wrong with the company, in my opinion. Moving into NVIDIA right now, NVIDIA not looking too bad either, 2.24% to the upside. Looking quite decent as a matter of fact, but once again getting retesting and rejecting at the 130s. NVIDIA really does not like this 130 level, right? At best, it can only spend a few short hours or 1 day in the 130s before getting rejected, and today was no different. That being said, beautiful daily uptrend right now, and at this point, since we have the higher high, daily uptrend is continuing, just looking for a pullback, anything pretty much above the 115, looking for a daily higher low for possible a second attempt at the 130 level. So we'll see how it goes for NVIDIA, but I've told you guys the best way that I like playing this one is waiting for declines and then writing short puts under big levels of support. I really like that style of trading, guys, especially into the month of October, where markets could be a little bit tumultuous and timid across the board. I'll be looking for short put plays on semiconductors at decent levels. So that's pretty much the analysis for NVIDIA. I would love to see them break above 130 and just do this, right? Break out, retest, and run a little bit further. We will see how it goes for the remainder of the week, but that would be the next style of trade I'd be looking for if we're looking for any longs. Tough for us to position longs into big areas of resistance without claiming this level first and retesting it as support. Now moving into Tesla before last. So Tesla down 3.7% here today. Keep a special lookout, guys, for the last Thursday's lows. If we break those, daily downtrend is continuing, and we take a look at this big support level coming up, right? Roughly 235 down to about 225 is the general range for that. Tesla has a very big catalyst this week, so very tough to determine which way the price action is going to break. That catalyst is on Thursday, the 10th of October in 2 short days. It's the robo-taxi event, right? So a lot of price action leading until that event will be highly speculative. Curious to see the way this one breaks. Personally, I will not be playing Tesla before the robo-taxi event. I think it can really go either way at this point. There's a lot of bullish expectations baked into the event. And if it's a disappointment for XYZ reasons, guys, you guys know what's going to happen. Tesla is going to fall off. But if they surprise us with something good, we will be keeping a close watch on the ever so hotly contested 265 area of resistance as of now. Bit of a battle right now, right? The daily bulls are risking losing the daily uptrend, but the weekly bulls are still in absolute full control right now. So we'll keep an eye if we continue to the downside this week. One thing's for sure, looking for a weekly higher low. Anything above 202, just looking for a weekly higher low for possible weekly trend continuation back into the 265 location again. The big area of support, guys, really starts 230 down about this 210 level. I know it's a wide range, but keep in mind, this has been a very, very, very big level for Tesla in its most recent share price history since March of 2021. So keep a very close eye on how we if we retest down there, how the markets react to it. And now lastly, Palantir. Palantir down 2.8% today. So not that good of a day for Palantir after breaking into the 40 location briefly as of last Friday. Now we are coming ever so slightly down. Are there any red flags on this chart, guys? Not really, right? Still a very nice daily uptrend right now. Looking for a pullback, anything at this point above 3609. Looking for a daily higher low for possible further trend continuation. So of course, target this location right here, the previous highs of resistance, the 12 EMA, right around the 3775 location. The only problem comes if we pull back too much of this move and either engulf it or pull back too much of the move, set the lower high with our 3839 level of resistance, which was our resistance coming back from 2020 and 2021, right? We got slightly over it, but I wouldn't say we've conquered it completely, right? So it's still in motion. If we break down below it, we could use it as resistance. And then if we fracture even lower over the next few weeks into the early portion of October, daily downtrend would be underway. And then we'd just be looking for extremely healthy weekly consolidation, which we haven't had in the last 5 weeks, right? So in the event we lose the daily and start consolidating a little bit, I see no red flags on the longer time frames right here. It's a beautiful weekly uptrend, looking for the weekly higher lows, a little bit overextended here on the weekly MACD. So if anything, if these markets continue consolidation, it's going to provide Palantir with a beautiful opportunity for some weekly consolidation, cool off these higher time frames, possibly retest lower 36, 35 location. At that point, the 12 EMA will be curling up and we might just be able to get a back test of the 12 EMA, and that will just be looking for a higher low. There's so much space, guys. Anything above 29.31. This guy right here is just looking for a higher low for further trend continuation. So we will keep an eye on the size of the pullback as it happens for Palantir. But as of right now, even the daily bulls are still in full control. There's no red flags. I'm just giving you the expectation in the event the next 2 weeks are more red than not across the entire market, right? So that's pretty much everything we had in terms of our market recap today. Some great levels coming up on a lot of the big tech names. So hopefully you guys enjoyed today's video. That's pretty much all I had for you. The portfolio recap will be done in tomorrow's video after the close. And tomorrow we're probably going to be tackling the Pepsi earnings as well. So tomorrow should be a fairly interesting day. Be very careful out there in the month of October, guys. I wouldn't say it's the perfect month to be going all into the long side. There's a lot of uncertainty, right? So if anything, you should be benefiting from this volatility to possibly be implementing some of these selling option strategies that I've been teaching you guys on the channel, right? Selling covered calls against some of your positions that have ran a ton in the past month would not be a bad idea. Raising a little bit extra cash, waiting for the big dips on your favorite companies, the ones that I'm looking at specifically, Amazon, Google, Microsoft, all in great locations right now, and just progressively buying the dip and building positions in your favorite companies, right? That is the best way to play the volatile month of October. Is just don't use all your buying power at once, right? Be very selective with the plays that you're willing to take, because we could have some continuation of the downside in the early portion of October, maybe for the next week or two as we move through this uncertainty, as we move through earnings season. We'll be getting probably a lot of deals in the month of October, guys. And usually November and December are very bullish for these markets. So don't spend all the cash at once with this 1 day's worth of decline. Save your buying power. Be very, very mindful of what you're spending your cash on in these current markets, because we really haven't seen that much of a pullback starting just yet. On certain individual names, yes, but in the overall market, SPY and QQQ, not that much just yet, right? So be very selective, and we're going to take this 1 day at a time together on the channel. And of course, I'll keep you updated with the plays that I choose to make throughout. But so far, my favorite looks right now, guys, are definitely Amazon, Google, and Microsoft for some initial dip buying plays right now. Looking very good, and I'm super excited for the month of October, guys, whichever way this one breaks. So that's everything I had for you guys. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Monday through Friday after the close. So hope to see you back in one video soon. And lastly, if you have any questions at all, guys, leave them down below in the comments. If you want a second opinion on a stock, on an options trade, a discussion about the macro environment right now, anything you want, leave it down below. Other than that, take care, guys. I'll see you tomorrow, and peace.